What the hell happened to Bitcoin in 2014? This is Flipside Bits, I'm DJ Booth. This week we're taking a look back at 2014 to see how far we've come last year. To put 2014 into context, we need to look a little bit further back to the last quarter of 2013 when the price went from around $100 per Bitcoin to over $1,000. In comparison to the somber mood of today, the excitement and hope in the community back then is something I remember fondly. Lots of people say the price doesn't matter, but it's almost impossible not to get swept up in the excitement when the price rises $100 every week for months on end. A recent article boldly claiming that Bitcoin was the worst investment focuses on the price decline of over 50% in the 12 months of 2014. However, if we take an 18-month view, we can say the price has tripled. The declining price in 2014 didn't stop $315 million worth of venture capital investment being thrown into blockchain-related startups, suggesting a healthy level of optimism amongst businesses and investors. Boost VC's Adam Draper has vowed to fund 100 Bitcoin companies in the next few years. Bitcoin miners began 2014 with a network hash rate of 11 petahash per second and ended the year with around 300 petahash per second. This market increase in network security and speed was largely due to ASIC hardware making their way to customers, finally, and large mining farms being set up to mine bitcoins, with one farm burning to the ground. 2014 also began with the first major retailer, Overstock.com, announcing they will accept Bitcoin, leading to many other big names following suit, such as Dell, Tiger Direct, Newegg, Expedia, Dish Networks, PayPal's payment hub, and the second biggest company in the world, Microsoft. In fact, at this point, any other big names to accept Bitcoin are just bandwagon jumpers, although they are welcome aboard. Merchant processors Coinbase and BitPay revealed they each have around 40,000 unique merchants signed up, and BitPay plans to grow to 1 million merchants by the end of 2016. The biggest story of 2014 began in February, when it was anticipated that Bitcoin exchange MT Gox was insolvent. Hapless CEO Mark Karpeles blamed a large loss of Bitcoins on a long-known quirk in the Bitcoin protocol called transaction malleability. Bitcoin core developers and the community at large were furious that MT Gox would throw Bitcoin under the bus, instead of acknowledging its own failings to audit its own books and code. Core developers claimed that blaming the problem on transaction malleability was disingenuous if not a blatant lie. Japanese police suggested that just 1% of the loss was due to a hack, and the rest was probably an inside job, where over 650 bitcoins disappeared. Karpeles was forced to resign as board member of the Bitcoin Foundation, and MT Gox has never come back online. The true cause of what actually happened at the exchange is still unknown, while the expertise of another Bitcoin exchange, Kraken, has been appointed to lead the investigation. In March of 2014, tabloid magazine Newsweek claimed to have unmasked Bitcoin's creator, Satoshi Nakamoto. Journalist for the tabloid, Leah McGrath-Goodman, thought she outsmarted one of the brightest minds in cryptography. The thing is, he wasn't the Satoshi, nor did anyone in the Bitcoin community appreciate the unwanted attention and invasion of privacy on model train enthusiast Dorian Nakamoto. Many in the Bitcoin community claimed Newsweek put Dorian's life in danger, and this outing was not just a mere annoyance, but rather a very serious offense. In June 2014, the USA became the first government in the world to sell bitcoins to their citizens. Bitcoin seized from the Silk Road. Is Bitcoin illegal? The US government sells them. The trial of alleged owner of the Silk Road, Ross Ulbricht, is still ongoing, and so far 80,000 of his bitcoins have been sold by the US Marshal's Office. In July of 2014, New York's egotistical Department of Financial Services released the proposed BitLicense regulatory framework that it initially hoped the entire world would heap praise upon them, but instead was widely ridiculed by Bitcoin companies and enthusiasts. Thankfully, the regulations have since been watered down to allow for software developers, merchants, and consumers to avoid troublesome oversight where only exchanges and other financial services that touch digital currencies would be regulated. In December 2014, Charlie Shrem was sentenced to spend 2 years in jail for allegedly selling bitcoins to a customer of the Silk Road drug marketplace. Charlie has been a prominent advocate for Bitcoin and was a founding member of the Bitcoin Foundation. During his home arrest, Charlie sent metaphysicists to flutter when his disembodied head had been seen touring the conference circuit. I hope he can continue these out-of-body experiences while incarcerated. It's been a tough year for many people in the Bitcoin space, but it depends which perspective you want to take. Bitcoin's birthday is on the 3rd of January. It's only been 6 years since Satoshi mined the Genesis block, and look how far we've come. Bitcoin is accepted worldwide in bricks and mortar stores, accepted by some of the largest tech companies on the planet, hundreds of Bitcoin ATMs in the wild, and a price that was $1 per Bitcoin just 4 years ago. I keep my sanity by taking a long-term view of Bitcoin. Keep it all in perspective. I hope everyone had a great new year and partied like it was 1999. Thanks to everyone who sent me a tip and commented. Keep the fun hashing through the blockchain. Do that YouTube thing that you do. Hit the thumbs up. Click subscribe, share your thoughts and questions in the comments. Don't forget, Bitcoiners, send me a tip if you enjoyed this episode. Every little bit helps. See ya.